Yeah.
Okay.
Stock, crypto, and option trading has large potential reward, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Oh man, we missed the best part. It started to get chunky there. Good morning, everybody. Welcome to Snipers. Let's jump around this morning. Hey, Paul, Jay, David, Paulina, Marcia, Mike. Dave's connecting to audio. We got Don and Earl and George and John Mack down under. Good morning, John. Actually, John, you're in Spain now, but welcome everybody. Let's get started. It's a big week ahead of us. Let's hop right into the markets and talk about what's up this week. It's a big week in terms of reports, economic reports. I'm at marketwatch.com, economy-politics/calendar. And what you can see this week, what's the date? Yeah, today's the 13th. So this is what's in store for the week. The Fed will speak today at 11 o'clock and talk about 1 to 5 year inflation expectations. That could move the markets. We got the CPI, the Consumer Price Index, coming out tomorrow. Again, that's a key inflationary indicator. We've got retail sales coming out this week. Home builders are coming out. Jobless claims again on Thursday, more jobs data. All of that, ladies and gentlemen, could create sharp movement in the market. And of course, what we're looking for is for inflationary numbers to indicate that inflation is abating. And then we want jobless claims to increase. That will could very well propel the markets to higher heights. The other way, the other side of the coin is if that data is showing inflation is not slowing, then we're going to see probably a further downside in the market. A quick look at the news today. Here's CNBC. Let me do a quick refresh here. I like, you know what I really like? This is really the Snipers approach and the way I do credit spreads, which is primarily our strategy for the Snipers weekly call, is I like to look for the big movers. Fidelity, Ralph Lauren, and Caterpillar are making big pre-market moves. In about 27 minutes, the markets will open and we'll keep an eye on those. And let's see what else we got. And there's a new inflationary warning for consumers coming from supply chain. So we got supply chain issues probably. Chiefs win the Super Bowl. Great game, one of the best games I've ever seen. Commercials were good too. Maybe in the chat box you can talk about your favorite commercial. Mine is the one about was it Ram trucks, the electrification dysfunction or something like that. I was a bit shocked, but I actually liked it. We got the big movers I talked about. Let's see. Other big movers. Disney's on my radar for today, and I want to see how it opens. Roblox, Meta, Zillow, Ralph Lauren. I know at least one of you have a bull put spread on Meta. So we'll see if we can take a look at those. Any stocks you're looking at and you want to talk about, please put them in the chat box. I'm very happy to take a look at what you guys and girls are all looking at. Bloomberg. I shouldn't laugh, but the U.S. shoots down another fourth object as China flings new accusations. So there's tension between the U.S. and China. Sometimes that moves markets. Sometimes it moves Chinese stocks. So let's keep an eye on those for the week. If you see any big Chinese stocks moving, then maybe there's something there for us. Crunch week for according to Bloomberg, just highlighted that. Morgan Stanley says stocks ignore Fed earnings reality. So reality about earnings. Let's take a look at that. I haven't read that this morning. What are they saying about earnings? Will spur more. Okay, so Fed hikes during earnings recession. All right, so Morgan Stanley is pointing out that earnings are not as good as they have been in the past. So earnings are starting to suffer from a high inflationary environment. And they're expecting more declines in the market, certainly over the long term. That would make sense. We've also got the recession word hasn't come out in a couple of weeks. All we need is an industry pundit to come out and say recession again, and we could see further downside in the market. The point being is that the market is very skittish. It can go anywhere, anytime. So we're in that environment, making credit spreads or any directional strategy, more risky. So we've got to be really careful if we're trading direction, which is a part of what we do in snipers. All right, let's go to the futures. And I've got all my futures listed here, and we're going to go through them here. Let's just see what's up with 24 minutes to go before the market opens. We're going to start with the /ES. I'm in Thinkorswim simulated environment, as you know. So here's what the current state of the S&P 500 is according to futures. And you can see that we are slightly up. We've got this really nice bullish run all the way to 4,200. Come on, support resistance, your best friend, hits 4,200 and has retraced. We get a bounce close to 40.50 or so. That's a hammer pattern that typically results in further upside. It's a beautiful hammer, actually. It looks like a hammer, doesn't it? Thor's hammer. So we got the open here. It got as far down as here, as up as high as there, the high of the day, and then closed slightly higher. That's a beautiful hammer with a long handle, and that normally will result in further upside. So perhaps that'll come to fruition. We shall see. Let's look at the NASDAQ. I want to save the Dow for last. Let's look at the NASDAQ /NQ. Similar pattern to the SPYs, but not as pretty. That's really not a hammer. That is a hammer. Pre-market, we got a hammer there. NASDAQ is up a tiny bit, just like the S&P 500. Let's look at the Russell 2000 /RTY. Same basic pattern, hammer pattern on Friday, another hammer pattern slightly up on the RTY. I tell you, this pattern here, look at, there's an example. When you see that kind of pattern, normally, I don't know what percentage is, but it's certainly more often than not, there will be some follow through afterwards. So we've got a hammer there. We got a hammer to open. Perhaps we've got upside just based on that pattern alone, despite what the market news and analysis is saying. Technically speaking, we have a bounce in our future unless we don't. /YM is the Dow. And man, this thing ain't doing nothing. It's just heading sideways. We're slightly up today. Hammer pattern there. Hammer pattern before pre-market. We may see some follow through. Looks like that's what's going to happen, at least at the open. And then overall, the Dow, the Dow Jones 30 industrial stocks have been pretty much range bound since the beginning of since December. We even go back as far as here. We've been in this range since November the 10th, sideways on the diamonds or the Dow. Okay, so that's the basic four markets. Let's take a look at bonds /ZB. Bonds are up slightly today. I keep saying this, I'm going to keep saying it. Bonds tend to drop with a rising interest rate environment, which we're in. And then bonds rise if people buy them. So people will start buying these. The interest rates are higher, meaning bond yields are also higher. So they're becoming more attractive. And again, we got a little bit of a range bound situation here. I would expect bonds to stay in this range, always keeping an eye on possible risk off, as if bonds start rising precipitously, and certainly if bonds break above this resistance level here, which on this chart is about 132, then go bullish on bonds. All right, let's look at the US dollar. I don't have Forex, foreign exchange currencies on my Thinkorswim account, but you can see US dollar, after getting really weak, has started to rise. One key relationship to note about the US dollar is that rising interest rates tend to lift the US dollar, and that would explain perhaps this recent bullish run in the US dollar. Let's zoom in a little bit so you can see it. Now, for the first time in a while, the US dollar is now above the 200-day moving average. I like this as a bullish trade, actually. It makes a lot of sense. You can buy some calls, sell a put spread underneath down here at support, maybe 27.5, and let this thing go sideways to up. So that's a good looking directional trade, in my opinion, or semi-directional, making money anywhere above, let's call it 27.50 right here at the tops of these peaks, the bottom of that bar there, and 27.50 would be a good place to sell a put credit spread. Perhaps you could even buy a call. And if you have other strategies like broken wing butterflies, then those are also good strategies, of course. Let's look at gold. Gold is down pre-market. Gold dropped. Now let's not get too crazy about gold. Gold isn't dropping because the markets are rising, or it's really not directly related to equities. What's happening is when the US dollar gets stronger, gold gets weaker, and that relationship is in play. I see no evidence of risk off. Of course, to see that, we need to see gold rising, and certainly that's not what's been happening. So no risk off on the gold standpoint. What else? I think that's it. Oh, let's look at Bitcoin. Yeah, I don't know where Bitcoin's going. It's either going to go sideways, down, or up. I'm not in the camp that Bitcoin's going to return to 65,000. I just don't see that. It could happen, but the enthusiasm for Bitcoin has certainly waned, and it's just kind of going choppy and sideways. I'm reluctant to call a direction on this, and quite frankly, I don't dig into crypto, and I don't know a lot about what people are saying about it. I consider it quite speculative, and for that reason, less predictable. And I typically stay away from it. Now, if we see Bitcoin going sideways like it did here, we could trade Bitto. So I like this for side when it's range bound. I love it for broken wing butterflies. But Bitto is an instrument that tracks Bitcoin. So you'll see the chart shape is exactly the same. All right, I like this sideways, bull and bear broken wing butterflies. Yeah, maybe a put spread underneath. If we get a bounce here, we start seeing some range bound behavior, then perhaps I would consider a credit spread or an iron condor on Bitto, but I don't see it right now. So let's go to the VIX futures. Yeah, look at that. Here's the 200-day average on the futures. /VX is the symbol. And you can see this beautiful relationship to the 200-day moving average, the blue line, resistance, resistance, resistance. Yeah, if we break above resistance, though, perhaps we'll have a correction. We look at the actual VIX, which won't incorporate today's slight down in the VIX futures. We can see what it's doing on the VIX chart. And although again, similar to the VX, the /VX futures chart, the VIX did spike up to 22 and then close below the 200 today. Oh, this is quite interesting, actually. The VIX, that was Friday's data. So let me just strike that, Mikey. Right now, the VIX appears down at the open. And of course, we'll check it out. All right, let's take a look at our portfolio. Credit spreads are it's like boxing. You will get hit in the face every now and then. So let's start with getting hit in the face here on Intel. Intel was a really beautiful trade in my estimation. We entered the trade on 2.3. We got out on 2.9. Why did we get out, Mikey? Well, here's why. And you got to do this. Don't mess around with hoping and wanting and praying and all of that good stuff. the simple rules for these trades are, this was a bullish credit spread. Let me take you to the day we entered on 2-3. And by the way, our credit spreads are still performing very nicely over the balanced time. But let's go to the entry date. And the way these work, the rules are, well, I'm a rules-based trader, and I hope you are too. When we sold the 28 put, bought the 27 underneath, generated a credit of 15 cents. We did 5 contracts, netting 75 cents credit with a total risk in this trade of 425. Risk management. Don't make sure that number there is no greater than your maximum position size, which should be somewhere between 2 to 3% of your current portfolio's value. All right, this was the trade, and it was a beautiful trade. After earnings, the stock took off. I can't remember which of the technical indicators. I think it might have been MACD. We had a bullish MACD cross, and this seemed like a really nice trade, and it was. I'd take it again. And then just to reiterate, when you put these on, you want to take a profit exit by buying your credit spread back for 10% of the original credit. So in this case, that would be 1.5 cents. We got 15 cents here times 100 for each share controlled is $15 of credit. So from the cents side of the house, you want to buy this back for 1.5 cents. You can't do that. So we'd say maybe round it up to 2 cents GTC. If that hits at any point in the life of the trade, you're out, and you completely, of course, eliminate risk and collect 90% of the original credit in this case here. All right, so that's the profit side. And most importantly is the loss side. So you got to be ready to take the spread off. In this case, the break even is underneath. There it is. That break even there, the light blue line, corresponds exactly to 27.85. So the rule is, if the stock closes beneath 27.85 in this case, then you shut the trade down. And look what happened on 2/9. Last week, this happened. Welcome to the world of credit spreads. You got to be prepared to take a shot on the chin, and we did. Although, you know, there it is. There's the break even, and we got our close beneath the break even. You exit. Don't ask any more questions. Take it off, and go find another one. Don't mess around with you know, looking for reasons for the stock to rise. Let the rules rule the day. Give yourself a break. Don't make it personal. It's a rules-based approach. Sometimes you get losers, and this was a loser. So I closed this down on the 9th for, let's see, what's that? 37, 20, 50, 40, 43 cents was the debit to buy it back. And we ended up losing $140 out of 425. Now that sounds like, maybe, you know, nobody wants to lose 140 bucks, but it's much better than losing 425. So that trade was taken off for a loss. And I would say, don't even do what I'm about to do. You could actually, let's turn off the closing legs, and let's see if we hadn't exited on the 9th, where would we be today on this trade? On the 10th was Friday. That was the last price, and we would have been down a little bit less. So Intel may very well rise from here. If it does rise from here and you're not out of the trade, then revert back to the rules and exit if we get another close beneath the break even. Once again, 27.85. All right, we had a couple. I have that as a loser, but this was a winner on Bitto. If Larry's on the call, he's excited. He had a Bitto trade, I know. Let's go to the 10th, and you can see what Bitto did. It actually dropped. This is when they get scary, right? So the day before we exited expiration, the stock tanked and got us pretty close to the break even. Now, this is when the rules really kick in. All right. So instead of getting all freaked out, like, oh, crap, I might lose, just, you know, ignore those thoughts the best you can. Follow the rules. Follow the rules. Follow the rules. In this case, we did such, and this trade ended up being a winner. We bought the spread back for 1 cent per the rules, and we netted a profit on this trade, a nice little profit on this trade, actually. Let me change that to a win. I did this at 6 o'clock this morning, so my brain wasn't quite online yet. And let's see what else we got. We got another trade on the EWZ. Let's take a look at this one. Once again, the rules are in play. This looks really good. We sold a 30 call on the 3rd, 10 days ago. We got 7 cents. We did 11 contracts. We got a potential profit in this trade of $77. A buyback for a penny on this trade. And here we are with expiration this coming Friday. And Brazil, the Brazil index, EWZ, looks really good for a nice little profit on this trade by the end of the week. Okay, I think that's it. Okay, good. So let's go into our lesson for today. And as you know, in Snipers, what we've been doing for a handful of months now is doing some education, discerning and discussing different technical analysis indicators and using them to find opportunities. So today's topic is detect when stock momentum fizzles. We're going to use an indicator called Stochastics. It's probably the most popular directional indicator on the planet. It was developed in the 1950s. That was a long time ago. Did they have computers then? I'm not sure. How would you do this without a computer? I'm not sure. Maybe they had mainframes they used or something. Or maybe they did it, but maybe they plotted it with a pen and a piece of paper. So what it does is it looks for stocks in an uptrend or a downtrend to close near their highs. So they're looking for stocks that are setting successive highs or successive lows. And the stochastic oscillators measure the momentum of an asset's price to determine trends and predict reversals. This is without question a reversal indicator. It does a really good job, actually. Doesn't always work, nothing does, but it does a really good job of detecting potential reversals. Got some examples I'll show you here in just a minute. So stochastics has 2 main indicators. There's what's called the %K, which is meant to represent momentum. And then %D is the 3-day average of momentum. And where it comes down to using it, if %D is greater than 80, that represents overbought. And if it's below 20, oversold. So that measures extremes. And basically what it means is, what goes up comes down, right? So what goes up must come down and vice versa. We're looking for these turning points. That's what we're after, finding the ends of trends and a good chance of the stock moving the other way. If we can catch these, enough of them, then we can generate some nice profits using stochastics. So here's how it works. When you pull up a stochastics chart, you have your %K. In this case, that's the green line. And then you also have %D, which is our trigger line. Again, the %D is the 3-day average of %K, which is momentum. Don't worry about it if you don't understand all the details behind the indicator. It gets real simple. So the indicator is drawn on a chart. And there's your 80 extreme on the top. Here's your 20 extreme on the bottom. And when you get a move like this, where the %D, which is the yellow line, crosses back up above, bullish signal. Conversely, when the %D line crosses beneath 80, that's a potential sell signal. High upside momentum above 80, high downside momentum below 20. So it's a really nice little indicator. And here's an example of Airbnb. This is a chart I just pulled up. This is a bearish. This came up as a bearish stochastics trade, potential trade. And so what I want to show you here is, look at these crosses right there. That's where the %D crosses above 20. And if I draw a line up to the chart here, that would have been the start of a pretty good little bullish trend up to here. Of course, we did, we got a little bit of a pullback here with a stop loss. We very easily could have bought a call option on this one and had a nice little profit as the stock moves up from, roughly 110 to 120, even though it dropped about 5 points. So that was a good bullish signal. Here was a bearish signal right there. You can see, had you traded bearishly, It's actually right there. I got my pointer slightly off there, but that was a bearish signal. Had you entered here, you would have been very happy you did with a put option or a bearish credit spread, however you want to trade direction. Here's a bullish cross there. And my pointers aren't lined up. Nice bullish indicator, nice bullish signal there. That one would have worked. Here's another bull here. That one would have worked quite nicely. And then as I speak, as of Friday, Airbnb showed up as a bearish stochastics cross as the signal line crossed beneath 80. So that's a nice little signal right there. And perhaps we'll check Airbnb out. So that's the basics of the indicator. You can find stochastics on virtually any charting package. If you have a scanner like Tom's Tools, we could actually use a scanner. I'm going to do this one in a minute. And there's different things you can do here. I'm going to say for now, use penny plus weekly stock list. That's a nice tight slippage list with granularity and expiration dates. It's a nice list within Tom's Tools. And then what we want to do here is focus our efforts, at least initially, on using %D, the signal line, as it crosses above 20. That would be a bullish signal. And then as %D crosses below 80, a bearish signal. All right, so these are going to give us signals. I think it's all really important when you take any of these signals to confirm them with others. Support, resistance for me, and volume. Moving averages and trend lines are really important on any chart, but you could also mix and match stochastics with any of the other scanners that I've mentioned before, any of the other indicators, MACD, RSI, ADX. We've talked about those recently. So you can use a combination and get multiple confirmations before you take a trade. You see me do that, and I check news as well. I'm a big support resistance advocate. I like moving averages and trend lines, and of course, volume is really important as well. Now, what do you do when you find a directional candidate? Well, you can use calls and puts. If you're a basic trader, if you want to reduce the risk and navigate high IV, you could use a debit spread. You can even use credit spreads, put and call credit spreads, which give you high probability. You exchange less profit, but you get more probability. You win more often. And then if you're an advanced trader, you can consider butterflies, calendar spreads, and much, much more. All right, with that, let's hop into the scanner. I'm going to show you how to find it. Let me just do it here. I'm going to go to, this is Tom's Tools. Actually, let me take you to the beginning. Most of you probably log in right about here. And then this is the basic tool set for Tom's Tools. I'm going to go to stocks, stock rankers, and there's stochastics right there. I'll click stochastics. And again, if as I said before, when you see the %D cross above 20, that's a bullish signal. And then here, bearish. %D crosses above is bullish, %D below bearish. I'm going to go for bearish to start here because I think I think the markets are rolling over. A lot of bearish sentiment. We could try both though. I'm going to select penny plus weekly stock list. And before I hit the search button, always in every one of these scanners is a help file. And if you click help, you'll find all that you could possibly want to know about stochastics, including usually the math behind how they're calculated. So help's there for you if you need it. Let's hit search. Let's see what comes up on the radar here. And LYFT. I like LYFT. We're going to look at LYFT today. I'm not sure the slippage is going to be good enough for us, but LYFT, if I click pick here, tanked on Friday. That's what I like. I like stocks that tank. We'll look at the news on this one in a minute. I want to do something with LYFT. We've got about, a minute before the market opens, and we're going to do something with this one most likely. But it also, if I hit chart here, it also, you can see, had the bearish cross. Now that makes sense. The stock tanked. It was in an overbought situation here. And then on Friday, we got a very, very decided break below 80 and a bearish signal on LYFT. So LYFT has to be on our radar. We could look at a few other of these. My favorite fast food restaurant, Chipotle. Let's take a look at its chart. Similar situation, overbought, sharp close beneath, and we're off. Here we go. Here we go. Here we go. After earnings, Chipotle tanked. Obviously, the earnings weren't so great. And then the stock has set lower lows since. This might be a potential candidate for us today. We want to check news. And I can go through a lot of these, but every one of these 30 stocks has had a bearish percent decross below 80, a bearish signal. Now, you can use the power of the scanners from here. I could save these 30 stocks, click replace. From here, I could take this my stock list, which is those 30 stocks. And from here, I could say, all right, well, what about if I took that list and I further washed it using any of the other indicators? So that's something to consider doing. We've talked about RSI, ADX, MACD, new highs over here. We talked about high lows and gyrations, or I'm sorry, channels. And we'll do more. We're going to do all of these over the coming months. But that's something you could also do. And then, or you could say, all right, well, I've got my list of bears. I could come into searchers, single strategy, and I could go after calls and puts. So I could say, all right, I'm bearish on my stock list here. There it is. And I want puts that offer the lowest percentage drop in the stock to double my money. And then I hit search. And then from here, you can analyze, wow, there's 117 different stocks here. Let's take a look at a couple of them. Let's go to KRE. This is a put option on KRE. Yeah, I'm not 100% bearish on this stock. It was at a resistance level, so perhaps further lows from here. But that's a potential trade for a put. JP Morgan. Let's take a look at JPM. Yeah, I mean, stochastics, yes, overbought, cross beneath, just a recent cross. This looks more sideways to me. I'm not so interested in that one. So you could play with calls and puts, do more analysis. As I mentioned before, I could also say, all right, let's go ahead and go after vertical spreads, single strategy. There it is, verticals. You'll notice there's a lot of strategies there for us. I'll select put spreads because I'm bearish. I'll go after my stock list, our 30 bearish stochastic stocks, hit search. And then we'll have let me hit the search button. There we go. And none came up in this particular case. The other thing that I like to do is credit spreads. And so I can go to single strategy, call credit spreads, my stock list. And then I could go after short-term credit spreads against my stock list. Let's see what comes up here. Disney, Snap, Bank of America. And then, of course, you want to look at individual stocks. That's the probabilities cone. Let me show you the stock and the IV on this one. So there's Disney. The earnings came out. The stock has dropped. So we could check this one out for news. Let's take a look at Snap as well. There we go. One that so all of these are, no, I'll get the wrong button here. Let's look at the stock chart. So earnings happened, the stock tanked, recovered, it's come down with the rest of the market. But here's LYFT. I like me some LYFT. All of these have bearish stochastics. Here's LYFT. Yum, 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 yum. Now, obviously, there's some bad news. Obviously, there's some bad news. Let's take a look at the actual stock chart. Well, let's go to the risk graph first. This particular scanner doesn't take us right to charts. So there's our risk graph potential, but I want to see a chart first. Let's do stock charts, and let's apply some basic technical analysis to this bad boy. Here we have our bearish stochastics cross. The stock is well below the 200-day average now. It's got strong support though at 10. See that number there, 10? Bounce, 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 bounce. And that is support. That will be support. Will be support. It's either going to hold or it's not. I don't know what LYFT's doing right now. We'll check it out. I like it. I like the chart. Let's take a look at the volume. Look at that volume spike. This is crazy good. Crazy good. I'll go into Thinkorswim. Let's see what LYFT is doing. And you can see that LYFT today has breached the low of the volume spike day, massive volume spike. There's a system that Tom offers, a subscription-based service where it's called volume spikes or velocity bulls and bears. This would be a decided bearish signal. So, you know, I like it when stocks tank, and you can make a call on the day of the tank, or you could wait a day. This is the best way to do it. And you look for a confirmation the next day. If the stock breaches the low, it's a bearish signal. If the stock breaches the high, a bullish signal. So we got a bearish signal this morning, and therefore that gives me a bit of a green light to sell a credit spread on LYFT. Let's take a look at the news though. The earnings came out right here. Get my glasses out. 2/9, which was Thursday. That was the earnings. Over here is the news. I'm going to navigate to 2/9 in the news. There's a lot of news on LYFT. I can't even get to 2/9. I do know. Here we go. Oh, this is beautiful. Yum, yum, yum. I feel like a vampire or an ambulance chaser. LYFT's Q4 adjusted loss widens. Good. While sales jump, yeah. Sets Q1 revenue guidance that was lower than expected, I believe. I think I read that somewhere. Where is it? Where is it? Where is it? Company said, oh, here we go. Okay, so yeah, so they projected a revenue guidance for Q1 of 975 million. But analysts were looking for 1.10 billion. So revenue guidance is less than expected. It was downgraded to neutral by JP Morgan. The price target was dropped. And I imagine if we look through this even further, here we go. KeyBank downgraded. Morgan Stanley lowered the price target, maintains equal weighting. So why on earth is this stock going to rise from here? It could, but the probability of such is less than you would. It's low, not less, it's low. So where do we sell? Where do we sell? I like, now LYFT is probably, might go sideways from here. We do have strong support at 10. So I would imagine LYFT may test 10, may go sideways. Don't see it drifting up. If it does, it probably won't that much. So the next step is, where's my line in the sand? I'm going to do a credit spread on this one. Where do I want to sell and make money below? What price point is my line in the sand? The closest that I would get on this one would be 12. You see 12 right here, round number, 12 resistance, 12 resistance, 12 support resistance here. That would be a good place to sell. 13 would be better. There's our 200-day moving average. The thing about credits, though, is as you move your line further away for more safety and higher probability of profit, you make less money. Okay? So the scanner gave us this trade. Let's take a look at it. The scanner said, well, let me go back to the actual data first. The scanner says that you could get a probability of profit of 67% to make just under 24% return on investment. That's the return on investment. It's a 28-day trade. There's the date, the life of the trade. These are March 10 options. Oops. These are March 10 options that expire in 28 days. After today, that'll be 26 days. So we're making on this one 24% over the next 26 days, which is close to 1% per day. Now, are we comfortable with a credit spread where we're selling the 1150 call? That's our line in the sand. That's where we need the stock to stay beneath in order to profit on this trade or make something by expiration. So we're selling the 1150 and we're buying the 13. That creates this quite beautiful risk graph. LYFT has just set a lower low. It's got 10 support. It could bounce from here. So I'm a little bit uncomfortable selling that close. So the next step is, well, let's lift up our credit spread. I could do it here, but this data is as of Friday. The data will refresh in 20 minutes at 10 a.m. Eastern time. We don't have it just yet. So what I'm going to do is go live here and go into the option chain, the live option chain for LYFT. There's the stock symbol. We've got expirations every Friday, which is good. That's what we want. And then I am going to change. Let me show you how this works. This is how it shows up. Checking slippage. Slippage is quite good for the Friday options here. Slippage is good. It's a penny or a few pennies wide. I could, let's take a look at a stock chart again. I could get aggressive and sell 1150s. Sell right here at 1150, right there. I think that's going to hold. I think the top of that bar will hold. 1150 would be the closest I'd want to get. And if I did that here, I could sell the 1150 call by clicking the bid price, currently 16 cents. And then I could grab the next higher strike, which is 12. And that would give me a 7-cent credit on a 50-cent spread. The distance between these two strikes is 50 cents. So that would mean I'd make 7 cents on 43, now 6 cents on $44 of risk by Friday. So 6 divided by 44 is what, roughly 15%ish, a little lower than 15%, somewhere in that neighborhood for a 5-day trade. That's not bad. However, I'm a little nervous about that. Let's try selling the 12 call and buying the 1250 call. That's only going to give us 3 cents. All right, that's too much. That's not a lot of credit. 3 cents divided by 47 cents. It's not quite 10%. We'll get a percentage point a day though, so that's not too bad. But 3 cents, man, you have to do a lot of contracts. What I would do here is perhaps lift it and make it a 1-point spread, doubling our credit, but reducing our ROI. We'd make 6 cents on 94 cents of risk, which is what, 6-7% by Friday. So if you're an aggressive trader, that's not a bad trade. And you would make money on this, provided the stock stayed beneath 12. So I'm liking that one actually. Sell the 12, buy the 13. The credit's already drying up. When you do these in the morning, if you like them, do the analysis at the very start of the day. I'm talking, but I would have made the potential decision to pull the trigger. The credit is drying up. So we kind of missed it was 7 cents when I first pulled this up, but LYFT must be dropping again. Yeah, so it came back up. It's now dropping a bit, confirming my personal, what's the word I want to say? Assumption, probably the best word, that selling up here would be a good idea. So let's check out selling more time. So this is a 1-week option. Let's just try going out to next Friday. We can get 8 cents on a 1-point spread. That's a little better. This expires a week from Friday on Feb 24. We could go for 10 cents on this at 12. Let's go ahead and put this in Tom's tools here. I'm going to edit this trade and I'll make this Feb 24. There we go. We want to sell the 12s. We want to buy the 13s. Let's hit risk graph. The current price is 9 cents. I think we might be able to get 10, but let's see what this looks like at 9 cents. 9 cents credit. So the best way to demonstrate or show 9 cents credit is to simply change the sell leg to 9 cents and then the upper leg to 0. Doesn't really matter what the individual prices is. The net credit for this spread would be 9 cents. Let's hit risk graph and check out the deal. So this gives us almost a 10% credit over the next 2 weeks. So it's not quite 1 percentage point a day is what we like. So it's a little shy of that. Excuse me, it's a little shy of that. But man, the probability of profit on this trade is 77%, which for a short-term credit spread is very good. And remember, the probability of profit is actually higher than that when you consider all of this crappy news and the stock tanking on a gargantuan volume spike. So that's a trade I like. Let's see what the current credit is. It's at 9 cents. I'll go for 10 cents. Let me check out the trade. Let's get the number of contracts first. $91 of risk per spread. I'd want to do 5. And that would multiply my $91 of risk by 5, getting us just under $455, which is below 500. I could do one more and be about 540. Don't really want to do that. Let's be disciplined about our money management. So there's 9 cents selling the Feb 24. Let me pop this in the subscriber WhatsApp feed. I'm going to type in, I haven't logged in yet this morning. Let me do that real quick. whatsapp.com. Going into snipers here, live trading. I'm going to post this here so you can all play with this if you like. I would say all of you should be doing paper trades. I'm not going to tell you to risk real money ever. When you're ready to do that, that's your call. But certainly it would behoove all of you to practice. So here's a nice paper trade. Let's go ahead and grab the screenshot here. I'll post it in WhatsApp. So if you want to play along and you are a subscriber to MWTC in any way, then you'll have access to this live feed. So there you go. If this fills, I will post it in the forum a bit later, right after the call. All right, 10 cents. Woohoo! Let's take a look and see what the stock's done. It's rising just a bit. Good. Oh, hold on. What if we do get 10 cents? Well, we're about to, I think. What does it do to our ROI? I believe that's going to get us in. It's closer. We're at 11% for 14 days. Actually, I'm wrong. It's going to be 11% for 12 days after we hit the top of the hour, once we get the live data. So we've got 2 days less today on Monday. That'll be 12 when the market's open. I mean, the data gets refreshed in Tom's tools, and we're almost at 1 percentage point a day. So let's go after it. I want 10. I want to do 5 contracts. So I'll change my contracts here. Now, if you don't have Thinkorswim, then simply fill out your form like you see here. Now, I generated this form by clicking on prices up here in the option chain. It's just another way to get to a form that if you have Schwab or any of the other form-based platforms, simply fill out the trade just like this. You want to sell 5 LYFT Feb 24, 12 calls, and buy 5 LYFT Feb 24, 13 calls for, I'm going to ask for 10 cents here, 10 cents credit. And that's only good for the day. You could maybe try for tomorrow, but let's just let this sit out there. In fact, I think what I'm going to do here, we're going to see if we can get filled here. LYFT's coming up a little bit. It doesn't look like it wants to drop much further. We did get our bearish confirmation. I'm going to ask for 10 cents. Mid price is 9, natural 7. Nice slippage on LYFT. Confirm and send. Verify with whatever broker platform you have. Verify that you have the right thing. I know I do. It gives you your max profit, your max risk, all of that good stuff. Click send. And I'm going to go back to monitor here, and under working orders, you can see it right on the top of the screen here. Here's the working orders, LYFT. We want a 10 cent credit. It's sitting at 9.5. I'm going to let that sit. In this case, 1 cent is not a big deal, but let's just let that sit for a bit and see if we can grab 10 cents. That will happen if LYFT rises a little bit. So there's one trade I had for today that I liked. Let me pause for a sec and let's check out what everybody else is saying here. So let's see, George. Larry says consumer price index effect. Yep. Slide rule. Yeah, slide rule. An abacus. And then George says in the 1950s, they had mechanical calculator. Oh, that's right. They did. I remember that. Okay, George is saying, who made them? Frieden, Flexo writer. All right. Johnny says 12, 13, Feb 24, 14 days. Johnny, did you get filled on that for 11 cents? Tell me that you did. I would love to hear it.
No, I didn't. It's
Oh,
up to 10 cents now, though.
okay, good. We should get filled here. And watch this, everybody. When I place this order, there are like 8 different options exchanges, and your broker will route the order to the exchange with the best price the moment you hit send, and maybe it's better somewhere else now at 11 cents. So LYFT must be rising. Do this for yourself. Cancel and replace your orders. Cancel, replace, and just it's now at 11 cents. Hit send. When you do that, I wouldn't say all the time, but a lot of the time when you reset your order, it gets filled. So do that throughout the day, especially if the mark price increases a little bit. So we should get filled on that. I'd be very surprised if we didn't. If anybody's playing this one and you get filled for 10, let me know, please. Earl said he just got 10 cents. Excellent. Earl, I'm going to track this consequently since one of us got filled for 10 cents. I'm using Tom's tools. This is a current live trade now. I'll go into saving this into our MWTC sniper live trades. I'm going to hit save. And the other thing I do is I run portfolios. I'll save this trade also. Let me copy it because I'm going to put this up on the boards in just a little bit. Right over here. And next, what I do is I go to trades, portfolio, edit, create. And I'm going to save this trade that we just did in a portfolio that I track called MWTC. Let me find it. Sniper Live Open. There it is. So this is a portfolio that currently contains the 3 trades I showed you before. And now this is a new trade. I click add. And now when I run my portfolio on just the open trades, portfolio performance, and then I grab the portfolio. Let's change the start date to sometime way back in the past, hit calculate. And then now you can see LYFT is on the board right there. Okay, so I use these in my own trading. I really recommend it. We've got many other trades in this portfolio, and I don't want to look at all of them. I only want to look at the open ones. So there's our trade on LYFT for today. I think it's a good one. Money management. Now, where is it? Here it is. So how do you manage this trade? Once filled, you want to put a GTC order in to buy the spread back for 10% of the credit. You want to figure that out? Move the decimal point over 1 to the left. That would be 0.01, which is 1 cent. Your good till cancel is to buy 5 of these spreads back for 1 cent GTC. That'll collect profits for you. And the other more important one is if the stock should close above 1210, then close the trade down for a managed loss right about here today. If that happened today, you'd be down, that much, which is 150 versus 450 if you play around with hoping the stock drops back down into the profit zone. So that's a trade we found with Stochastics. It was confirmed with news. It was confirmed with support and resistance. It was confirmed with volume. It's just a really, really good trade. It could lose, but we got a lot of edges on LYFT. Okay, now here's another thing I want to do. Well, let me just check one other one. APPS also came up. So let's see. Yeah, APPS was another one I liked. Let me show you APPS right now in a live chart. This also had some bad news. Yeah, baby. Now, I'm similar to the LYFT. Look at that. Volume spike. Boom. Bad news on earnings. Stock tanks. What was the earnings news on February the 8th? Let's see, Digital Turbines sales are trading lower after the company reported worse than expected Q3 results and issued weak F23 guidance. Yes, please. I like that. I feel like a vampire, but I don't care. It's a game. It's a game that everybody's playing. So the next question is where to sell. I like 13. I like 13.50 better. I like 14 even better. What can we get though? Easy way to find out is go to trade. Let's look at slippage a little bit. Slippage is quite narrow in good working order. I'm going to take this to vertical and I'm just going to check prices. So where do I want to sell? I want to sell at 14. I might sell at 13.50 if there's not enough money at 14. So let's go to trade and check out 14. Okay. If I click the 2 here, there's 3 cents of credit on a 50-cent spread, which is 3 divided by 47, which is not 10%. That's kind of my minimum on credits. If you're so inclined, you could go after it. If you sold 13.50, this is by Friday, then you're making 7 cents on 43 cents of risk. It's a 50-cent spread. 7 divided by 43 is a good 15%. So that to me is it's fastball, and let's play. Let's do this. A nice paper trade. I'm going to build. I ran the scanner before, and I don't believe it came up on the scanner if I remember correctly. Let's go to call credits. Default short term, APPS, search, none. All right, I don't care. Go to option chain, APPS. This is a Friday trade, everybody. Friday trade, selling at 13.50, Feb 17. Oh, that's next Friday. No, that's this Friday now. What day is it? So I'm going to select Feb 17's 7-day options, 5 days as of today. Let me find my 13.50 call. I need more calls. I'll increase the number of strikes here. And I find 13.50. If I can work my browser here, 13.50. I want to sell the 13.50 call. I want to buy. Oops, that's not what I meant to do. I want to sell the 13.50 call. And I want to buy the 14 call. That's what I did, right? Yep. Sell 13.50, buy the 14. 7 cents currently. Let's go ahead and hit risk graph. And I'll change my credit on this trade to 7 cents. So we're going to sell the call for 7 cents. That's what currently the price is. 0 up top. Net credit for this spread will be 7, giving me 16%. What? Over the next 7 days by Friday, baby. And the probability of profit is 67%. So we got a 2 out of 3 chance of making money on this trade. We got bad news, which should keep the stock depressed. There were downgrades that I didn't cover. So this is more aggressive. Let's post this up on the WhatsApp feed if you want to play with this one. And then I'm going to go get it filled. Let's see if we can get 7 cents. It's a nice little 1 week return. Fast pitch. You might get struck out, but that's the way it goes. All right. How many contracts? I've currently got $43 of risk. If I did 11 or 12, well, I think let's try 12. 12 contracts, trying to get that number to right around 500, just below, hopefully. 516. Using discipline about money management, I'll drop the contracts to 11, zooming in a little bit so you can see what I'm doing, and then hit risk graph. And this is what I'm going to go after. I want 11 contracts. Let's find it. There we go. Sell 11. Sell 11 13.50 calls, buy 11 14 calls, currently 7 cents credit. Hit confirm and send. Send. Monitor. Is going to sit there for a little bit. I've got it for 7 cents credit. Would I take 6? Let's take a look here. What would 6 look like? Still going to be enough ROI for a week, I tell you. 13% over the next week. 5 days, actually, 13.64%. If we get 6 cents, I'll drop this one. It's already down. I'm not going to go chasing this one. I'm going to cancel, replace, make it 6 cents, and let this run for the rest of the day. If it fills, then I will certainly track it. Got it. I just got it for 7 cents. Let me check. I just got it for 6 cents, and we're going to track this one. So there you go. Let's save it in MWTC Sniper Live Trades. Hit save. I will in a minute populate our portfolio, and then I'll also put it on the boards. So that, everybody, is a wrap for today. Let's check questions. If you have any questions, please ask. Phil got 7 cents on the APPS bear call. Excelente. All right, everybody. Hope your Super Bowl team won. We had a really good party here in Costa Rica with Gerardo, his family, and his friends and my friends. So it was really great. Hope you had a good time, and have a great week, everybody. We have earnings. If you're in earnings, we have earnings live trading coming up this afternoon at 3 p.m. Eastern, or 2 p.m. Eastern, 2 p.m. Eastern, 2 p.m. Eastern. That's a new time, and it's earnings season. So there'll be plenty of great trades for you all to pick from. With that, thank you, everybody. Have a great day. Pura vida. Much love. See you soon.